So glad to be with you, talking about our ag commodity markets. I'm Marlon Bowling with you, your tour guide to the ag trade. Well, let's take a look at some overnight export sales business that we had, according to USDA. And you know, this is now 7 out of 8 days that we have sold corn to China. So today, the amount was 123,000 tons, and in every single case, it was a case of old crop corn being sold. So that means they will take it right away. Interesting stuff. And of course, we had weekly export sales numbers that showed over 3 million tons of corn sold last week. Well, and there it is, 3.19 million tons. Soybeans were actually down on the week, and wheat sales were down too. But let's take a look at our current market action here on the big board with our quotes provided by Bar Chart. We started out with a big surge on the corn, and now things are just kind of fading away here. May corn now 2.5 higher at 636 after a high of 644. So we have already given that thing a haircut of 8 cents since the open this morning. We have the December contract now 2 lower, and now we're at 552.5. Not necessarily technically what producers would like to see, the way it's performing after big sales like that. Well, May soybeans right now down 17.5 at 1431. Where is the bottom? We have November soybeans down 9.5 now at 1263. It has come off of its earlier low this morning by roughly about a nickel. And then you have the wheat trade. Well, in wheat, we have Chicago May now 4 higher at 667.5, but it's about 8 cents off of our earlier high today. So there for a while, it was flying pretty high. Kansas City wheat hanging on to very strong gains. May now up 12 3/4 at 824. So it's staying with a pretty strong performance, but it's about 7 cents off of its high too. And May spring wheat in Minneapolis, 7 higher at 840 3/4. Checking out our July cotton, we are now just 27 points higher at 79.16. December up 11 points at 79.92 per pound. I have Ted Seifried on the line, and Ted, of course, is with Zaner Ag Hedge. He's in Chicago. And he's here to help us make sense out of this choppy market action that we're seeing today. Of course, yesterday, you have to throw in the fact, Ted, that we had the Fed increasing interest rates by 1/4 point. No big surprise there. Everybody kind of figured that. But what's moving the market today? Because it seems to be just kind of swirling around here.
Yeah, Marlon. Well, you know, I could do my best Scott Shellady impression and go on a rant on why the Fed should have raised interest rates more than just that 1/4 point. And that 1/4 point, because it was so expected, was really just a punt and did not do enough to the markets. By the way, some of the language that was used after that announcement of specifically the language of saying no rate cuts between now and the end of the year, no likely rate cuts between now and the end of the year, that was the more important thing that came out of that Fed yesterday. And had markets under pressure after that announcement came out. Anywho, as far as today is concerned, export sales, that's really what we're looking at. And that corn number was really impressive. However, expected, or should have been. You look at the range of guesses, and somebody had a 1.7 million metric ton number in there, which would have been less than the business that we knew we did with China. I guess they must have been expecting some cancellations. We did not see that. But we knew China was going to be in there for roughly 2.1 million metric tons. So then the question was, how much other business did we have? There was some good export business to Japan, which went unnoticed, or at least we didn't see that on the daily wires. But it's good to see Japan getting active once again, because they're well behind their normal schedule of what they would be buying from us. So that, I think, provided a little bit of a spark for corn. However, like you said, well off of highs now in corn. Did we just see the spike high for corn for this move or this bounce off the lows? That's a big question that we're going to be asking ourselves between now and the end of the day. You're also going to say that, you know, the old adage, and I don't love cliches, but buy the rumor, sell the fact. We knew that this was going to be, we should have known this was going to be sales day, and we see it, and we get that knee-jerk reaction higher, but then we start selling into it. So we'll see. And in the meantime, soybeans, under a lot of pressure. By the way, beans are getting really very oversold at this point. So they are due for a bit of a technical bounce somewhere in here, especially the November beans. But you have the soybeans making a very big statement on a chart right now, and it is a breakout to the downside. So whether this continues to head to the downside, I'm not sure. But at this point, we are really very oversold.
And they did take out their 200-day moving average yesterday, And in fact, they didn't just take it out, they just blew it out to the downside. And we are seeing follow-through selling today. However, it's getting pretty oversold too. We'll keep an eye on that. Ted, we'll come back in a moment and we'll take a look at the latest in our livestock trade. We'll look at the futures right after this. We are back with you, and we're talking with Ted Seifried of Zaner Ag Hedge. Now let's take a deep dive into our livestock trade. We'll begin with our live cattle board here, and our quotes are provided by Bar Chart. And live cattle are still lower across the board, but not by very much. They are barely lower. Look at June, just one tick lower, 2.5 cents to the downside. We're at 155.87, and August is down 22 now at 155.75. So they're weaker, but barely. On feeder cattle right now, now they have turned mixed. You can kind of toss the March out, but you have the April contract 7 lower at 194.30. That's a very slight move. May is 55 lower now at 198.22. But you have August and September actually just a little bit higher out there. On lean hogs right now, you have the April down a dime. You have May down $1.15 at 82.10. So a lot of pressure continuing in the May. What's your thumbnail opinion of what's going on in livestock, Ted?
Yeah. I mean, just don't look at a hog chart. I guess is my biggest way. It's just another day and another day we're down, which is, again, somewhat frustrating because export sales in pork were once again really rather good at about 38,000 metric tons. So what is it going to take to stop the slide in hogs? And that is a really good question. There, too, we are in an extreme case of being oversold. And there, too, you would expect to see some sort of corrective bounce relatively soon. It just, again, we're still waiting. So we'll, as far as cattle are concerned, you really like what we've done in cattle this week, or at least the last 3 days. Yes, okay, we've not been sharply higher, but we did go down and test that 200-day moving average, and we've bounced off of that at least the last couple of days. Now we're holding well above that. If we can hold on to, I'm not going to say the strength because we're down, but if we can avoid a big flush out in cattle and go back down and not go back down and test that moving average support again, I think we are setting ourselves up for a bit of a bounce. Cash seems higher. I think domestic demand is pretty good, and even export sales were relatively solid.
Yep, they seem to be that way. Well, thanks for talking with us, Ted. Great insight into the markets, as always. Ted Seifried of Zaner Ag Hedge from Chicago.